Sunil Subramaniam, Deputy CEO at Sundaram Mutual Fund, who's joining us from Ahmedabad. Thank you so much, Mr. Subramaniam, for speaking with us here on NDTV Profit. So you are launching a new fund. Give us, the details about it. Where, what exactly is this fund all about, and what are going to be the investments like?
Hi, thank you. Hi, as you know, Sundaram Mutual Fund is one of the most powerful retail franchises in the mutual fund space in India, and belonging to a parent, Sundaram Finance, which has for over 60 years been servicing retail customers and creating a retail distribution platform. Our focus has always been to unearth opportunities from which retail investors can enhance their capital creation. So over the last year, we have launched a number of funds which are focused on the India growth story, the cyclical story, through the launch of a series of microcap funds, which have been received phenomenally by the market, and we've collected over 800 crores. At this point in time, what we are doing is we are bringing a very different fund, but at the same time, which can add tremendous value to investors' portfolios. The name of the fund is the World Brand Fund. Right? So as its name indicates, it's a fund which is focusing on investing in the top brands in the world. Now, how from Sundaram are we looking at the world story and able to find out the best brands? This is because recently, over about a couple of years ago, we have got a license from the Monetary Authority of Singapore to set up a full-fledged asset management company in Singapore. And it's staffed with investment professionals with over 2 decades experience. So with their knowledge and experience, what we are bringing to the market is a fund which invests in international stocks. Now, typically, most international stock investment funds are either a kind of a geography-oriented fund, like a US fund or a BRIC fund, or they are generally an asset class fund, like a gold fund or a commodity fund. But what we wanted to do was, because these funds typically appeal to the HNI segment, but being a very retail-oriented franchise, we were very keen that the product we bring should be a more all-weather, which can deliver value to retail investors over a medium period of time. So in selecting the World Brand Fund as our first launch vehicle from the Singapore, being advised by Singapore to our AMC, we have carefully chosen a portfolio construction methodology which has been very robust over the last dozen years. It has delivered value consistently. And the reason for the same is, by focusing on the top 30 brands in the world, we have seen that a model portfolio constructed in a similar manner has delivered sales of double-digit numbers, profits which are at least 50% higher than the sales because of the brand's pricing power. And not only that, the stock markets have amply rewarded. So a 5-year investment in these top brands such as Coke, Apple, Nike, Google, has delivered something like 50 to even 500% returns over a 5-year period, right. In the case of an Apple, for example. So we believe that such a fund is something which is ideal for the Indian investor to experience international wealth creation possibilities. So right. That's the ethos behind the fund, and we are launching this on the 20th of November. It will be open for roughly 10 days as a first launch, but we'll follow through with subsequent launches. Right. And it's an ideal opportunity for the Indian retail investor to own brands such as Nike, Apple, Google, which are very aspirational in nature, and probably in the course of a day in your life, you will use 10 to 15 such brands in your day-to-day existence, right. Starting from your toothpaste, to the computer that you use in your office, to the shoes that you use to run in. Right? So we believe this is the very high potential product which right. From our stable we are able to bring to the retail customer.
Right. So you're saying it's a very high potential product. Is it also for an investor who's probably trying to enter into this market for the first time?
Absolutely. Because most Indian retail investors have very limited exposure to stocks outside of India. Right? They are entirely stuck to the India risk-reward scenario, whereas there are many countries around the world which are posting as good growth rates as India. There are many opportunities for investment outside India, which though there is a window which the government allows, about $125,000 for an Indian individual to buy stocks outside, typically the top brands are very expensive for them to buy. So right. Even buying 100 stocks of a kind of model portfolio that we have designed will cost an investor almost 2 crore rupees. Whereas
Right.
for a small sum of 10,000 rupees, we are giving an aspirational access to the retail investor to own stocks such as Google, Nike in their portfolio.
Right, but Mr.
So I think it's
Mr.
a very,
Subramaniam,
very one of its kind
yes,
opportunity.
this is of
Pardon?
course for retail investors a new opportunity, but retail investors have steadily been coming back into our markets. What's the sense of going abroad?
That's correct.
What's the sense of going abroad, investing in a Facebook and a Google, when people are saying that it's a bubble there in the US? The US markets can correct anytime. We are flush with funds. Funds are coming into our country. At the situation that we are, what's the logic of going abroad?
That's a very good question, and let me answer it in two parts. The first part is there's no denying that India is a growth story of the future. FIs are putting money into India and everybody is putting in money into India. But if you study what has happened with the BRIC countries over the last 3 decades, as their GDPs have grown, right, their urbanizations have grown and their GDP per capita has shot up. So today, 30 years back, India, Indonesia and China were the same GDP per capita levels. Today, both China and Indonesia are double at our GDP per capita because they have already experienced the GDP growth phenomenon over the last 2 decades. India, under this new government, is just set to start on the process of urbanization and high GDP growth. So when GDP per capita grows, what do you think is going to happen? People's individual incomes are going to go up, and not only are they going to not buy only their necessities, they are going to move into aspirational and luxury oriented goods. And who do you think is going to benefit from this sales of luxury oriented goods? It is going to be the leading brands of the world. Just to give some numbers to you, right? Last week you would have read in the newspapers, the second biggest retail consumer oriented company in India is Samsung with a sales of 44,000 crores. Now, one part of India's growth is going to be enjoyed by these foreign brands like Google, Nike, Samsung, Apple. But are you as an Indian stock market investor able to benefit from that? Absolutely not. So this fund gives you the ability to fully benefit from the growth that's going to happen in our country. By being limited to the Indian stock market, only a portion of that capital appreciation can you benefit from. So that is the first answer. So this is not India minus fund, this is an India plus. So just add this fund to your India portfolio and you will fully benefit from our growth aspects.
Right. Mr. Subramaniam.
The second aspect to this fund is the fact that, there's one more reason why it makes sense to diversify outside India.
Right. Mr. Subramaniam.
Can I answer that?
Very quickly, if you can tell us that, and what's your view on the Indian markets, and whatever dividend your investors will get from this fund, do you think that will beat what they will get in their India funds?
Yeah, let me quickly answer to that. So one of the things we've done is, as you're aware, each country goes through its cyclicality and ups and downs. Now, whenever anybody invests, the concept of diversification which mutual funds bring, in Indian mutual funds, that is those who are investing in India, your diversification is limited to within the country. However, you are able to add world exposure to your thing, and we did a model portfolio of this world brand fund, and over the last 5 years, if you see, this fund has a standard deviation which is 12 percentage points lesser than the Nifty, at the same time has delivered a return which is 10 percentage points better than the Nifty. So if you look at a risk-weighted return, this fund has delivered 1.08 versus 0.28 of the Nifty. So what we are saying is, because of the low correlation of this fund's performance versus the Indian Nifty's performance, it's a brilliant product to add to the India portfolio, whereby you can improve the risk-weighted return of your portfolio. So those are the two reasons: fully benefit from India's growth and diversify from India so that you have legs to stand on at all times in period and time. The other point is on your views on India. We continue to remain bullish on India. We believe that the Make in India phenomenon is going to add a huge amount of manufacturing capacity and jobs to the country, and India's story continues to remain strong. So not for a moment do we say that Indian investors should not invest in India or the market is overvalued or overpriced. On a 3 to 5 year outlook, they will get very good returns from the Indian market, but they can enhance those returns by adding the World Brand Fund to their portfolio, and at the same time cater to an aspirational thought which is there in every Indian, that as a Google or a Nike, and I'm a part owner of that company. So that's what this fund is going to give to the retail investor.
Yes, thank you so much, Mr. Subramaniam, for speaking with us at NDTV Prof.